Hello everyone, welcome to the daily market update video. Today I want to share some important announcements and some important insights, and I will also talk about my analysis for the market action. So without further ado, let's jump on right into the analysis. So the first theme of the day that I wanted to discuss is finally we are breaking out of the chop range. So I will discuss that further in the daily charts, but just wanted you to know that now you can expect a lot of movement in the markets. Since last 2 weeks we were just chopping around sideways, at least we broken into the range. So enjoy and let's jump on to the analysis. So moving on to the weekly charts, I wanted to discuss a few things. First thing is we got rejected from the top of the Bollinger Band. Second, we finally turned red on the 5th week of the 4 consecutive weeks that we were talking about in green. So finally, we have a red week, give or take, because this is Thursday and we just have one trading session left. And even if we go tomorrow sideways, then we will have a red week. So those of you who were looking for a stoppage or a digestion or a minor pullback, here you go. And also, my initial support on the weekly level is sitting at 15,700. So let me show you all of this in the weekly charts. So going on to the weekly charts, this is the weekly chart. And as you can see over here, right now, we rejected on the top of the range for this week. Also, the initial support on the weekly time frame is the 5-day moving average that is on the weekly time frame. And that corresponds to 15,700 level. So if let's say we have a multiple week pullback, then the first line of defense is going to be 15,700 level on the Nasdaq futures contract. So this is the development as far as weekly time frame is concerned. So let's move on to the daily time frame and let me discuss some important points on that daily time frame. So on the daily time frame, I wanted to discuss these important points. Finally, we broke out of the range. The main point over here is for today's session, this is the first time where we are closing below the 5-day moving average. Why is this important? It is important because it sets the tone of the market moving forward for at least 3 to 4 days. Since we could not defend the 5-day moving average, now the next level of support is going to be 13-day moving average. So let me show you what I mean on the charts. So this is the daily time frame, and as you can see over here, from the start of the session, we did not defend the 5-day moving average. And the moment we lost the 5-day moving average, the next area of support was the 13-day moving average, and the major area of support was this green line, right? That is the 13-day moving average. The reason why I'm telling you this is because stocks or any securities move from supply to supply and demand to demand. So these moving averages act as supply and act as the demand whenever the uptrend or downtrend is concerned. So if we lose one area of supply or one area of demand, naturally the next area of demand becomes the support. So if you see over here, the first line of defense was this light blue cyan line. This was the line. This is basically 9-day moving average. Now, 9-day moving average, as per my opinion, it is more important on the intraday basis and not on the daily basis. And especially when we are talking about Nasdaq futures contracts, which can be really volatile, for Nasdaq contracts to have a movement of 1% or 2% is very, very natural. So my whole thesis going into today was, if we lose the 5-day moving average, then the next probable or the next possible area of support which can hold strong was this green line, that is the 13-day moving average. And this is exactly what I discussed in yesterday's video. So look what happened today. We exactly validated the 13-day moving average, that is this thing, and we bounced back. Now the problem was, we don't know like how much depth or how much down it's gonna go before taking the support at 13-day moving average, that is this green line. So as traders and as informed market participants, what we needed to do is we needed to wait for the incoming data. So there were also a lot of news events, and the PCE numbers, that is the Fed's preferred inflation numbers, so that came in lighter than expected. So obviously, at least on the numbers, the inflation is slowing down, and that would ideally should have a positive impact on the markets. But that is why I always say that trust the price action and not the data. Trust the reaction of the market and not the actual news. So that is why I normally say that, do not trade until the first 30 to 45 minutes of the market. So that's exactly what happened. So today, my thesis going forward was, if we lose the 5-day, I am going to get long only on the 13-day, and I will see how the price reacts today, and then I'll go long, because I didn't get any shorting opportunity after the regular market session got opened. So I will discuss and show all of this in intraday charts, but just wanted you guys to know that this is a start of a pullback. Now, always remember, it is the start, and that we don't know the actual depth. So I will give you specific levels, like this is the level which will be tested, I'm pretty sure, in the next few days. That is the 13-day moving average, that is the green line. But more importantly, since this is the month end, and since all these pivot levels are going to get refreshed, my main area of support is this red line, that is the 26-day moving average. And let's say we have a bad news, and we have a really bad session, then the ultimate area of support is going to be the 50-day moving average, that is the green line. So I don't think, or according to my experience, I don't think that the markets are going to go down further than this, that is the 50-day moving average. So at worst, what will happen is we can test the 50-day moving average, and the initial area of support is this red line, that is the 26-day moving average. So please make a note of all these levels. This is the initial area of support, and this is the final area of support. So I don't think that this pullback is going to be a very big pullback or very big correction. I don't think that's going to happen. And the very reason why I'm saying this is because we are entering into a seasonally strong period, and the economic data of inflation is steadily going down. So if the inflation is going down, and if the job market and the economy, at least on nominal terms, is stabilizing, then there is no reason for markets to have a very big pullback. So just make a note that this 50-day moving average is going to be a very lucrative buying opportunity, and this 26-day moving average, that is the red line that you see over here, is going to be the first opportunity to dollar cost average for those of you who are investors. So this is my update on the daily time frame, and let's jump on to the intraday time frame. So today's intraday session was very, very interesting, and let me tell you why. Because we actually went into the markets defending and saying that, if the 5-day doesn't get defended, then we will look for the short opportunities. And that's exactly what happened. So when we go to the charts, and let me see, and let me show you what I mean. So over here, you can see that this is the 5-minute chart in the intraday time frame. And this is exactly where we started the session, that is 6:30 on the Pacific time. Now, what happened is we were already below the 5-day and 26-day moving average. All the major averages over here were above the price action. And it started and it never recovered above the, or never got a bullish crossover in the session. So normally what I do is I stay, silent, and I do nothing for the first 30 minutes to see what market is doing and what's the real trend. So that's exactly what I did. I stayed in zero position till 7 o'clock, and then I was thinking, okay, what is going to happen now? So at 7 o'clock, we already, lost the 5-day moving average. And then the question going forward was, are we going to test the 13-day moving average on the daily line? And that was exactly corresponding to 15,856 level. That is this level. So we were hovering around the S1 pivot level for 7:10 and then till 7:30. And after 7:30, I was thinking that if the support level S1 holds, only then I will go long. But what happened exactly, you can see over here. after 7:30 we got a huge red candle. So obviously the next support was the S2. But the problem with S2 was S2 and the daily support level of 13-day were almost coinciding. So I was of the opinion that the only thing that I can do today is short. But the problem was I was not getting a good shorting opportunity. So I just waited and see how price action reacts when it interacts with the 13-day moving average level. So it exactly holded and chopped around for almost 2 to 3 hours. So you can see over here, like we entered this chop zone and we stayed in this chop zone for almost 4 hours and 5 minutes. Like we did nothing in this. And the best part about this consolidation was after all the news and the data event happened. So you can see over here, if you go to the news, everything was done by 9 o'clock. 9 o'clock Pacific time means 12 o'clock Eastern time. So I knew that all the news events are done, all the catalysts are done, and still we are, consolidating at S2 level. So this was the point where I went long. And obviously, like I pull out of my position on 15 points. But the question was, today I had to become a lot of patience. I had to have a lot of patience because I was not able to short over here because I was waiting. And then after 7:30 there was no clear sign of rejection. So I had to wait until 10 o'clock to go into the position. So many a times intraday we have to be really patient and really only believe the data that we have. And if those levels are not achieved, then there is no point in trading. So I only got one long entry for 15 points, and that's exactly what I did. And the best part about today's closing was, if you can see over here, the closing is strong. So, I mean, I'm not saying that, markets are going to recover, but all I'm saying is the closing was strong. So do not expect a massive pullback until and unless you see, a big news or a negative event. But as far as I'm concerned, for intraday basis, this was a really good level. That is the 13-day moving average that is on the daily chart. That is this level, 15,860. So you could have easily got a lot of like 15-20 points, but that's exactly what I did. So this was my take on intraday. Qs were pretty much in sync with the entire session over here with the Nasdaq contract. So there is no divergences over there from which we can learn, but it was pretty much in sync. Talking about the VIX today was really shocking because it made a doji. It tried to go higher, but it did not. So if I go to 5-minute charts, it was getting rejected at R1 level. So even that was one of the signs that if VIX is getting rejected at R1 level, and if VXN cannot charge higher, then the markets cannot go lower, because both of them are inversely correlation to each other. So if VIX goes higher, then the market goes lower. But if VIX cannot close higher, then there is a very minimal chance that the market should go lower. So it's like this was a really good indication for the intraday traders that after reaching the 13-day moving average, the market was on a standstill. So that was one of the learnings from the VIX. And regarding the news events were concerned, on the macroeconomic level, there were a lot of news today, but more of those news were on the pre-market side. So we had very little to no impact on the trading, because all those news were before the market. And after market, in the regular session, these news were almost around 7 o'clock. And as you know that I don't trade in the first 30 minutes of the session, so I didn't need to worry about that. So this was my take on intraday time frame. And to sum it all, to give you a summary, you can expect that in future, in coming 1 or 2 weeks, we will test this 26-day moving average. If the economic data comes in weaker, or if there's something negative catalyst, then there is a very high chance that we test this 26-day moving average, and that will be a perfect opportunity to start the dollar cost averaging. And my ultimate support again is this 50-day moving average. And according to my experience, this is my insights. If something changes, if I change my view, then I will let you know. But looking at the price action until and unless we have data to support our statement, there's no reason to change the view. So this is my view. You can expect a minor pullback till this level, and that's pretty much sums it all. So enjoy and keep learning, keep trading, and please feel free to like, share, and subscribe. And yeah, thanks for your time. And until next time, we'll meet you tomorrow.